Okay, good day everyone. Thank you for coming into this YouTube channel Trade Live with Precise Trader. Today is 5th June and this is a Europe session. Before we move on, do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly education and purpose and user information entirely at your own risk, and you must assess the risk of your trade with your broker before you put in your trades. With that, we move on to our live analysis. So the key data that is going to be out tonight, okay, the key data, we have construction PMI from the UK, which is coming out in 16:30, another 1.5 hours, and forecast is 47.4. Then we also have the euro refinancing interest rate refinancing rate announcement. Okay, previous was 2.4, and market is expecting a 0.25% cut to 2.15%, followed by the monetary policy statement. Then 2030 we have unemployment claims. Okay, that is forecast was 240 and forecast is 236. Previous was 240, followed by ECB press conference and Canadian IV PMI. Okay, then think that is it for today. Then tomorrow we have the non-farm payroll from the US. Okay, that is going to be the major data which we need to pay attention to for the rate direction from the US. Okay, let's move on to our live live trades. Okay, let's look into the, let me see, what chart is this? Okay, I'm not sure which chart is, let's see. Okay, so you're showing this. Okay, so here let's look at uh, the market's movements. I think market has been pretty quiet, except for some movement on the gold. Then what we will do is we'll just try to see, because since the euro data is out, so we'll try to take some trades based on the data from the euro. Then we will try to do some gold trades and see what other trades there is possible for us to do. So let's see, let's start off with gold. Okay, I just want to share with you what is gold is doing now and what is to be expected. So at least we'll get a clear idea how we can trade this market with ease. Okay, if you look into this data, right now, if you see, give me a minute. Okay, so gold. So if you look for gold, okay, looking at this, right now, this is on the daily. Okay, on the daily, this is a congestion. Okay, congestion with a limited upside. Okay, so this is the pattern is telling us. When I say limited upside, means that we should not see the price going above 3440, because this was your previous lower high. The highest high was 3540. So now this high should be lower than this low. This high. So taking that into consideration, so let's say we see an extension beyond this level. So most likely the market has got chance, or the has got chance to reach at least 35 or 50 before the market turns. Okay, so this is for the bigger picture. But on the daily, okay, when we look onto the daily, so right now this is a congestion. So if you look into the pattern, the market is making equal highs, higher lows. Okay, equal high, higher lows. That means to say market is got no strength to go higher, but at the same time is making higher lows, which means to say that the market has got no strength to go lower either. So that means is stuck in a very tight trading band or the trading range. So if we are going to go for a sell, we should exit before 44. Okay, we should exit before 44. And on the other hand, if we are holding a sell, we should not see the price going above 84, 85. So that should be our call and the way which we are going to trade on this market. So this is based on the daily. So if we are looking on the 6 hour, okay, 6 hours. So the next lower time frame after daily immediate is either 12 hours or 6 hours or 4 hours, either one, we can use. But as of now, if you look into this, market is trading near the open, okay, and this time is expected to last for uh, another 2 hours. In fact, 1 hour 50 minutes to be more precise. So now, how are we going to trade, and what should we do? So as of now, if you ask me, we should be looking to sell or put our stop above 78 half. Okay, put our stop above 78 half, and profit should be either 62 half or break this low. We should see exiting before 44. So this should be our game plan. That means go for a cautious sell with a stop above 78 half. That should be your immediate, or if you are aggressive trader, then you can afford to put above 85 half. Okay, 85 half. So let's see how we can trade this. Then we see how we can go. Okay, now if we look into the 2 hours, okay, the 2 hour has just started and it is showing some strength. Looks like the price has got strength to push higher above. Okay, give me a minute. I need to, because I'm holding. Just give me 1 minute. 1 minute. I just want to. Just clear my positions. Just give me 1 minute. Okay. So now, so now we are seeing the price for the next 2 hours, because the 2 hours has just started. So this is seeing some strength. So let this price see, then we'll try to get a better price. So how high it can go? So now we can look to sell near 77 or near 80, 82 or 83. So these are the two levels, either 77 or 83. Then we should see whether the market has got strength to push higher. Looks like, okay, we may see the price pushing higher, because your 15-minute RSI is still showing there is some more strength. So what we can do is, we can go for a sell at a slightly uh, better levels. So we'll try to sell near 76. Okay, 76, 77. Then okay, 76 or 77. Then we can put a stop above 85. Okay, we put a stop above 85, and this 77 we go in half. No, sorry, 0.1. We'll do on two or three tiers. Okay, three tiers. Either 0.1, 0.3, 0.5, or 0.2, 0.4, or 0.5 and 0.8. So we can go on any one of these three tiers as entry lot size. So we don't see the price going above 78. So then on the other hand, if this market did not reach 77, then we may see the price turning earlier. That means there would be a failure. Then we might see the price breaking below. Okay, below. In fact, let's take 15 minutes as a guidance. That means below, if let's say it goes below 68, then chances are this high may be seen and we may not see 77. So what I'm going to do is, okay, I'm going to give a call. We are going for a sell, cautious sell. Okay, cautious sell. Gold lot. Okay, I'll let you decide. We can go on 0.2 because I think the risk is not that much. 0.2, 0.4 and 0.7. Okay, this is the lot size at 3377. Okay, just now I said 3377. Yeah, so maybe you can put as 3376 half. That is 0.2. Then we will go 80. If let's say the 77 breaks, we should see about 80, 81 half. So the next one, 3381, 81 or 81 half. Then the third tier, okay, this is 92, is your previous high. So if let's say we see an extension of this, then that might be the previous high, which is 92. So that would be, maybe we can put it as 80, 88 or 90. Okay, so maybe we'll put it as 88, 3388. Okay, stop the 76 half. We'll try to stop at 84 half, 3384 half, three three eight 3386 half and 3394 half. Okay, and TP. Okay, I'll just give this first. So this is the going to be our entry point. So that means we are going for a cautious sell gold lot, which is three tiers. Okay, we are going to go for three tiers because this is still in a range. This is it's still in a congestion between 92 3392 and this low which is 3334. So right now this market is caught in a range. Okay, so now we are going to sell on three tiers. 0.2 at 76 half, 0.4 at 81, and 0.7 or 8 at 88. And for the 76 half we are going to put a stop at 84 half, and this 81 we are going to put a stop at 86 half, and for this 88 we are going to put a stop at 94 half. Okay, and then as far as the TP is concerned, TP we would take at the staggered basis as well. Okay, what do I mean by staggered basis? Okay, meaning to say okay, the staggered basis, the first one 76 half. Okay, 76 half we will try to exit at 66 half. Okay, 66 half. Then that 81. Okay, 81 we will try to exit at 72. Okay, 72. Then the 88 we will try to exit at 78. Okay, so these are the three exit points. So you can key in. See, what we are trying to do is you can key in the orders and let it work its way out in the event. If you are not able to even monitor, I think we should be able to see the TP getting filled if the market has got a decent pullback. Okay, decent pullback. So I just repeat. The first one is 3366 half. Then the second one was 3372 half, and third one is 3378 half. Okay, so these are the TP levels. So you can just key in these orders, then we can see how this thing works. So the only thing we need to know is whether the market is going to go hit 77 then turn, or if it may turn before that. So this is where we got to sit in the driver's seat to see. So in the event, let's say the market doesn't hit that price, the market turns before that, then we may want to go for a sell, but that has to be done only after another 1.5 hours. So we don't have to be in a hurry to go for a sell now as it is. Okay, so this is for the gold trade. And please, if you want, you can just key in the orders and let me also key in, so at least just give me 1 minute, let me also key in this. So what I'm going to do, I'm just going to share with you, and we will work out the probabilities. Okay, we'll work out the probabilities. What happens if, let's say, all all get triggered? Okay, what would be our loss? Then 66 half, 66 half. Sorry, 72 half. Sorry. Eight 78 half. Okay, so okay, what we are going to do is, let's discuss the possibility, because remember I told you we would be standardizing and finalizing all our approach and the way we are going to do things, before mid of June. Okay, so we still have another one more week. So within that, I just want to guide you along and share with you how we can do things. So at least we have a proper plan and proper approach on all our trades without emotion controlling at all times. Okay. So remember yesterday I was teaching you the five checks you need to do. So today I'll be giving you one more check. So I think that's it. So once you apply all these checks to see whether you want to be in the trade, or whether you want to let go the trade, or whether you want to take a partial trades, or whether you want to do a re-entry. See, there's a number of ways which we can trade, because especially if you are planning to go for a full-time trader, that means if you're planning to go for a trade for a living, you need to look for opportunities. You should not miss any opportunity. At the same time, we should not get emotional in the event, if we are losing money. We should not get very excited if you are making money. You just have to stay calm, just go day in day out, just looking at the market and to do that. But of course, we need to trade with confidence. Okay, so now let's see the checks one by one. Okay, now if you see here, okay, if you see here, you see the things we are going to play the game today. We are going to play the game today, and we are betting that today. You see, if you look at the pattern on the daily, okay, if you look into the pattern or the price action or price language, because pattern is a different thing, but price language or price action we can say. So looking at this, you see the 2nd of June, it was a up day. That means market open near the open, close near the high. The next day was a down day. The next day was an up day, and today looks like it should be a down day. Okay, so this is the first thing we have to know based on the first. Maybe we will start with the weekly. Okay, we'll start with the weekly. So if you look into the weekly, this is trading above the previous week. So this is also in a congestion. So which means to say that this high should not go above this high. So most probability for the high is it can be 3395, 3413, or a retracement of this previous high and current week low, which is 3408. So these are the probable highs for the week. So chances are this might be the high or this may not be the high. Okay, we are still too early to conclude this. So what we know is we should be seeing the high to happen for this week either at 3408, 3414 or 3440. So this is based on the weekly. So now we are going to go into daily. Always remember, we try to tone down, look and zoom in to see for least risk with the best opportunity and with the best rewarding thing. So now if you look into the price action of daily, it says like earlier on I said, okay, up day, down day, up day. Today should be a down day, but that doesn't mean that okay, if it goes up then we totally ignore. Okay, so now what we got to do is today is going to be a down day and this is going to be within this range. Looking at this pattern, today's low has to be higher than this low, definitely has to be higher than this low. So in the event if the 92 breaks, then we may see the price extending to 3408, 3414, 3428. Earlier on also I think we were getting the same answer. So just get yourself mentally prepared. Today is going to be a range day with the downside view, provided this 84 half holds. If it breaks, then we may see the price heading towards 92, 3408, 3414 and 3428. So all these levels, in the event this level breaks, we got to get ourselves mentally prepared to go for a sell at either one of these levels. But of course, we wouldn't know which level is going to hold and which level is going to do. So now if you look into this, today I'm mentally prepared. Okay, this is what, and as of now I feel that this is going to be the high. Okay, now next we go into a 6 hour. Okay, the 6 hour toning down. Okay, toning down from weekly, daily, now 6 hour. Okay, this is telling me that currently this market is within this range of 3384 half and 3361. Okay, this is for as of now. So if you see this low breaks, then we may see the price extending towards 44, but definitely has to be higher because this is making a higher low. So that means we should see the price either 56 or slightly higher, maybe 56 or 58. So looking at this now, chances are, okay, this is going to be in a trading band or trading range. You remember the daily was, today is going to be a down day. Okay, always remember when we expect the price to be a down day, the another clue we can give you is expect the market to come down during US sessions, because then only it becomes a down day. If Asian session comes down, then US sessions might be either breaking the previous low and go even lower, or if it goes up then it doesn't tally. So another clue I'm giving you is we should be expecting the price to come down during the US session. Okay, now we are going to trade. So now we are going to trade, and this is going to be within the next 2 hours or 3 hours. So if within the next 2 hours or 3 hours, this time is going to get finished in another 1.5 hours. Okay, 1.5 hours. Then after that, a new time band will coming into play. That most likely that time we should see the price coming off. So since we are seeing strength now, so we can go for a cautious buy as well, but exit before this level. Okay, since we want to go for the trade, then or But the problem with this is, if we go for a buy, no matter what happens, we either we expect the market to turn within 1.5 hours, or we should be taking our profit within the 1.5 hours. So that is the key if you are going for a buy. But if you are going for a sell, we can afford to wait or give more time, maybe another 6 hours or so. So now you know where is the probability and where are we sitting. So then, how can we trade on this? So now, next we look into a 2 hour chart, which has just started at 3 o'clock. So now it's showing an up move. So expect this trend to continue or turn before either this high or this high, and that is where we are going for that trade. So let's say we want to go for a buy, then what we should do is we should be looking to buy near, I don't know whether we can get it, either 68, 69, stop below this low and exit before this high. This should be our plan if let's say we are going for a buy. So let's see whether, looking at a lower time frame, whether we have a probability of trading to go for a buy, or we will wait for a sell. So now, toning down, finally, this is going to be your 15-minute. Always remember, we need to know the precise location of the price and the trend, then we can trade with confidence. So looking at this, see, this is a bit tricky here, because market is making lower high, lower low on the 15-minute. So when we see here, this high should not go beyond this level. So if we are going for a buy, okay, if we are going for a buy, then we should looking to buy at 71. We should exit within 1.5 hours. Then we should exit before 77. See, can you see how I toned down and go for the trade? So early on, remember I said the checks we need to do for the sell. Okay, usually when you are going for a buy or sell, concentrate on the high and low. So that means if you are going for a buy, you should concentrate on the low. If you are going for a sell, you need to concentrate on the high, and you have to use that as a benchmark level for low, least risk. That means less risk with going for a opportunity. So now, if you see here, remember I told you the checks. Okay, when we go for a buy, we should see whether the low is either equal or higher lows than the previous low. That's one check. See whether the price is trading above the open or below the open. That's the next one. Third is moving average crossover. Fourth is RSI. RSI, where is the RSI and what is the RSI telling us, whether it should be going up or going down. Then finally, fifth is the price action. Price action or price patterns, patterns or whichever you want to call it. Now, the final one I want to give you today is one more tip is, always remember, when you go for a trade, especially when you are trading for a living, when you are taking a trade or when you have already taken a trade, we should be evaluating the probability of the trades based on all these checks. That means based on the high-low, whether it's trading above or below the open, whether the moving average, then RSI, then finally, I'll give you one more tip is, the holding period. Okay, the holding period is one of the most important. Okay, what do I mean by that holding period? Always remember, when you are in the wrong side of the market, do not give more than 15 or 30 minutes for the market. Okay, what do I mean by that? So, like for instance, if let's assume, okay, this trade, let's assume this trade, we are holding a sell. Okay, let's assume, okay, we are holding a sell. Okay, let's say we shorted here. Okay, let's say we shorted here at 69. Okay, now you are losing about $3, and let's assume you put a stop here, 85 or maybe 78 half. Let's assume you put a stop here. So now the question is, should I hold my trade, or should I reverse my trade, or should I just let it work? I mean, there is wait whether to see whether I get stopped out or not. So, so you see, that is the question. It's a $1 million question which you need to answer yourself in order for you to evaluate your trade. So now, if let's say I've shorted at 69 and I put a stop at 85, 85. So that means I'm losing about $16. Okay, $16. Okay, now if I lose $16, my profit should be at least $12 or $16. If you're looking at 1:1, at least $16, or maybe minimum, maybe we put it as three quarter, maybe even $12. So you see here, okay, the condition. I mean, I told you earlier, if let's say I sold at 69, so I told you the low has to be higher than this, which is 43, based on the price action. And let's assume, the next immediate high is 55 or 56. Okay, 56. So you see here, okay, I can, if the price really goes down, I can get 56. If I sold at 69, then I may get $13. Okay, but the problem is we have already seen a low at 61, 30, 61.30. So this low has to break, then only you can see the price hitting 56. If this is going to hold, then chances are this this low may not be seen. So looking at this, okay, you sold at 69, and 61 half, there is a minor support, which is your current low. So which is only you get $7.50. That means even the price goes below, you're only going to get $7.50, but your risk is $16. I think it doesn't tally. So then you got to make your, you got to take your call. Okay, you got to take your call, and you got to do some action. You have to take some action in order for this, because selling at this level with that stop loss and this TP is not going to work as of now. I'm talking about as of now. Of course, things can change. Maybe another 1-2 hours. Maybe the euro cut rate, the dollar strength may come in. So if dollar strength comes in, maybe the gold can go up. Anything can happen. But what I'm saying is, as of now, if we look into this, this is what we are going to see. So now, how can we trade this? So that means the 69 I sold. Okay, this is definitely out as of now. If I put my stop at 85 or 85 half. So what should I do? I should reduce my stop. I should reduce my risk control. So if I lose, then I don't lose that much. Okay. So the next check we can do. Okay, since this I'm holding a sell, market is against me. So now the next check I can check is how long this market is going to be against me, and what is the strength of this market. Okay, so if you do these two checks, that might give you some comfort zone whether you want to fight or you don't want to fight. So the comfort zone is, all I know is this 6 hours is going to end in another 1 hour 15 minutes. So in other words, I have to tahan, I have to sustain, okay, for another 1 hour 15 minutes. Then after that, which I may get a relief, or I may get the market turning down. The next thing is, when I look into the strength, okay, if I look into that strength, okay, what is it telling you? Looks like market is making a turn, because higher high, and now we are seeing lower high with a down close. So if your next candle breaks this low, chances are, this might be the high 74, and I don't think that 77, 76 half which we put in is going to get filled. Okay, so now I've already given a call at 76 half. Now you are in the driver's seat. Okay, now you got to decide. Okay, now looks like that 76 half is the chances are slim. So how do I trade this? How do I manage this trade? So now what I will do is, if I were you, what I will do is, since I want to sell 0.2 at 76 half, so I'll reduce maybe 0.1 or 0.2. I'll try to sell at 73. Okay, then this one I'll put a tight stop at 78 or 79. And if I see the price breaking this low, making lower lows, lower high, then I can still be in the trade, and I don't miss this opportunity. So looking at RSI, if you ask me, okay, what would happen, whether this low is going to hold or whether this low is going to break. Okay, looking at RSI, if you look at 15-minute, market is showing strength, but of course, it can go up. Okay, before I forget, since we are doing this, okay, I'm planning to go for a sell 0.1 lot at 71 half. Okay, I just want to sell 0.1 at 71 half and put a stop above 78 half. And my TP, I would either exit at 61 half, or I'll see whether that breaks. If it doesn't break, if it breaks, then I may want to exit at 56 half. 56 half. So which means to say 71 half, I got $15 reward and $7 risk. I think this is worth considering. So let me try to go for a sell. Then we'll discuss further. So what you can do, you see, you can once you know what is to be expected, then that is up to your individual individual risk reward, and go for the trade. Okay, so that means, you see, like what I'm doing now, I mean, I'm just telling you what I'm doing now. Since I know the market is looking like it's going to turn, I I don't want to miss this opportunity. So what I'm doing is, I mean, of course, I want to sell um, maybe at 70, 70 half, 0.1, with a stop above 75, 75 half. So there is a number of ways which we can play the game. Okay, so now, because the problem is, you see, once you know what you're doing, why you're doing it, then you can trade with confidence and without emotions. So now, remember I told you 76 half. So now what I'm doing is I'm entering maybe 0.1 or 0.2 at 70 half, and I put my stop above this or above this level, 75 or 76, for a lower risk. Then the only thing I got to wait is the next 1 hour is very uh, essential, because the next 1 hour, either this thing can go up, or the next 1 hour it can show weakness. Either one is possible. So we, as a trader, we got to see in front of the screen, we have to sit in front of the screen and decide what you want to do and how you want to trade. So maybe let me give you this so so you see how I'm keying in order. That means I'm sitting in front of the screen. Okay, of course we have created a view. Okay, we have created a view selling at 76 half, 81 half, 88, and that is our view and the signals which we have given. But I'm sitting in front of the screen. I feel that market has made a temporary high. One of the reason being is this is showing lower highs, lower lows, and this is the first signal. Okay, even if you look into a 1 minute, okay, 1 minute, if you see here, this is a divergence in the price. So which means to say there is a possibility that this might be the high. So now, if I mean, of course, I have to trade, I have to do. So now what I've done is, I put a sell order at 71, which is slightly near here. So then I put my stop above this level, 75 half or 70, yeah, 75 half, because I'm betting that this is going to be the high. If this is not the high, then I have to wait for the next one. So what will happen is, since I have already taken a trade, the 76 half maybe I may want to cancel it, because once this thing is stopped out, once this thing is stopped out, then we'll try to go for a higher entry. Since I've already taken a trade, and I am responsible for my actions and what my decisions is. So if I go for the trade, so the only thing, two things can happen. If the market really turns from here, which we are expecting, then you would be on the trade and you would have made at least about $7-8. So maybe, zero point 0.1, maybe it's about $80, $80. So it depends on what is your trading size, and you just have to do. But on the other hand, if let's say this market has cheated, because the problem is, we still have one more hour left on this time. So that is the problem. If this situation is the same situation, if it happens at another 1 hour later, then I would be very comfortable. Then probably I may want to go zero point 0.2 or 0.3 lots. So that means I might try to want to go a much higher volume, because as of now the risk is 50-50, because we still have one more hour left, and we are not sure whether this is the high. But of course, looking at the chart patterns, okay, usually, okay, when the market is in a downtrend or uptrend, we should not see the price closing above 78.6% on pullback. So this signal is telling us that most likely this might be the high, but the question is, we are not sure whether, because we have another one more hour left. So that's the reason we have to take a chance of 50-50. So you see how our decisions can change, and trade minute by minute, and as long as you stick to the rules, you stick to the law, I think you should be able to do well overall, because this is going to be purely a business and not gambling. Okay, so let's see what happens. So while we are waiting for that, let's go and discuss on the euro dollar, because the euro dollar, there is a news. Okay, the euro dollar, what I am what we believe is, okay, this is let's do by the week. Okay, what we feel on the euro, this high 115.70, okay, this is okay. Now you see what is happening is, this market is in an extension on the quarterly, okay, quarterly, which means to say this is the second quarter we are in, and this strength can last until the end of this month, but there is a strong resistance at 116.20 and 118.65. So that means the price should turn before these two levels. So even if you look on to the monthly, okay, even if you look on the monthly, the price has made a high on April, okay. Now we are in May, it was in a range, and June it is trying for the price to push higher. So overall, meaning to say that even if the price goes higher, we should not see the price going above 115.15 and 115.50. Okay, now we look for weekly. So weekly is telling us that price has seen, and most likely the 114 114.55. Okay, remember I told you, if a high is seen, we should not see the price going above 78.6, which is 114.65 or 114.95. So we should not see the price going above this level. So which meaning to say that there is a probability, okay, there is a probability that today is going to be a down day. That means it's giving a similar picture for the gold. So now, how can we trade this? So we go on staggered basis. So what we do is we'll try to hold, and we have to, this trade we have to hold for the news. We have to hold for the news. That means today we had the order. Okay, by the way, that 71 order is filled. Just saying. Sell 3371 is filled. Okay, so now all we know is we should be expecting the high. Either the high should be here, or we can expect a spike during the announcement. During the announcement towards let's see, 114.80 or 90. 114.80 or 90. Either we should see a spike at 55 or in extension of 75. So how we can trade this? Okay, now if you look into our 360, so what I am going to do is we'll try to sell 0.2 at now 11415, and remember our TP, we have to exit at 60, or if it breaks we should see the price heading towards 30 or 10. These are the three price targets. So now, as of now, I want to sell 0.2 at 15, TP at 113.65. Okay, 65. Then I want to enter 0.5 at 55. Okay, 55. So the 0. The one I'm entering now, I want to put my stop above this level, which is 55 or 60, maybe 65. 65. So then the other entry, 11450, I want to put at 85. Okay, so these are the two entries, two tier entry, because there is a news. Then when the news comes out, then we know how we can play this game. So here, cautious sell, euro, 0.2, sorry, 0.2, 0.5. I'm entering in two tiers, at 11415, 11455 or 50. Stop at 11465, 11485 or 95. Okay, TP, two levels. TP at 11365, 11330. Okay, and this is, I am fighting for the data. Okay, the data. So once the data is out, so I will just, in fact, by the way, before I let you know, today we having 8 o'clock we are having a session. That means we are having a US session, and we will be trading during this rate announcement. So I'm just keeping you updated. So this 8 o'clock, before the announcement, we will be taking the trade, and we will be doing a couple of trades, not only euro dollar, maybe some crosses. Okay, some crosses. So we can look for opportunities. Like as I said, we got to work efficiently. We have to know when there is an opportunity, we try to grab the opportunity. So we would be doing this trade during that announcement. Okay. So now let's go back to the gold. Okay, I think it's moving higher. Okay, remember I told you. So because the only thing that is disturbing is we still have another 1 hour. Okay, because the only thing is, okay, so now as of now, okay, what is my plan? Okay, what is my plan? uh, I am I am into this trade. Okay, I'm only zero point 0.1 is a very small lot size. So what I'm going to do is my 76 half. Okay, I want to hold, because the reason is because after this 1 hour, the next time belt is going to come into play. So what I will be doing is that 76 half I'll be holding. Then this 75 half, either if you put, you can raise your stop this 75 half to a higher level if you feel, if you are a aggressive trader. But if you are a conservative trader, then what I suggest is you try to put the 75 half, let it get stopped out. Then maybe you may want to sell higher at 78 or 81. And how you can do that is, the only way is you got to wait until 5 o'clock. That means the market may go higher, then before 5 the market may start to turn down. Okay, so anything is possible, but as of now, okay, this is we still feel that this is the high, but can change within another 1 hour. Okay, so let you decide, and you trade with confidence. So it all depends on how is your risk appetite, what is your mindset, how is your money management, that means what is available for you to trade. So these are the things that decides you to do. So another way also you can do now is, see, since you already sold at 71, if you feel you don't want to take the risk, you may want to close that 71 at 72 or 71, then you re-enter at 76 half. So whichever way, this is all, trading is all your individual decision. So you can also do that. But the problem is, you see, now this is market is giving you a dilemma. That means, if you feel that this is not the high, then it may go up, then come down. If this is the high, then after this, the next time belt, it can go down. So this, we can't give a perfect answer to that. So it's all probability. So you got to decide what you want to do, how you want to manage the trade. And if, let's say, today was a good day for you, you can afford to take the risk. If, let's say, today is a bad day, then you don't want to take this risk. So you may want to enter at a much higher price. Let you decide whatever you want to do. This is your call, your decision, your trade managing you're going to do, and that's how you're going to handle it. So the only thing is, right now, that's why I said this is 50-50, so anything can happen. Okay. Okay. Any questions? So far, I think we have taken two trades. One is bureau. We are just trying to sell at 11415, and we want to fight for the news. So then the other one is gold. Is we are going a very small lot because we feel the high is either can be seen or yet to be seen, and only market can give us an answer. Okay. So you have no questions. Then I'll see you at 2000 hours. Okay, 2000 hours. Then we will see how we can manage it. Then we'll do trades and we'll see how. But hopefully, before that, this should give us some answers. Okay. Okay. Thank you. I'll see you again at 2000 hours.